Hello, chart watchers, and welcome to this Tuesday, May 7th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the trade war has kicked in again today. We got the Dow Jones Industrial Average currently below yesterday's low, back down near that 26,000 level. Minus 435 points today. The S&P 500 down 48. We have moved below 2,900. Don't like that move below that double bottom. We'll talk about that in just a second. The NASDAQ down 146 points, and the Russell 2000 back below the 1,600 level, near yesterday's lows, down 25 points. 10-year Treasury yield down another 4 basis points, 2.46%, as money continues to rotate into the defensive Treasury area. Volatility index has gone up 50% in the last 2 days. We have now moved up above that 20 level, up almost 30% today on the VIX as the selling escalates. Pointed out a couple of global issues, looking at some of the areas around the world. Sweden and China, two of the hardest hit so far. You can see Sweden down roughly 2.7%, China the same. Here in the U.S., technology struggling, down more than 2% today. A couple of industry groups, though, that were getting hit hard. One was gambling, the DJUSCA. We do have Wynn Resorts reporting after the bell tonight. We'll want to keep an eye on that. But the group here is now trading, as you can see, looking back, it's trading at about a 5-6 week low. Marine transportation, which has been one of the strongest areas of the market, really giving back quite a bit today, but still technically within its uptrend. And as I mentioned yesterday, gold benefiting a little bit from the fear and the weakness in the market right now. Money rotating into safer areas of the market. Gold being one of those. Looks to me like gold is maybe poised to make a run at that 50-day moving average up near 122. We are on our way there, trying to get back up above the 20-day moving average for the first time in a few weeks. All right, Aaron, 2 days of trade war. I don't know if I want to say talks. It might be lack of talks. But, yeah, market's a little nervous.
Yeah, it hasn't been doing too well, has it? Today doesn't look good at all. I mean, I know we were struggling a bit yesterday. Today is not good.
Yeah, yesterday, it seemed like we opened just about where we are today right now. Maybe we're a little bit lower, but we opened, and remember, we were just kind of there was a lot of buying going on. We've recovered most of those losses yesterday. Now the selling's kicked in, and we're almost right back where we started yesterday. I think the Dow's a little lower, S&P's a little lower. NASDAQ's about where we were. The Russell 2000 right about where we were at the early stage yesterday. So today's
It'll be interesting to see if we recover by the end of the day.
Yeah, I get the feeling we're not going to.
I know. Whoa, you're bearish. I guess it's very short term.
Actually, there's negative divergence on the major indices. There's negative divergence on the 60-minute charts. Actually, I've written about it. I said, I don't know, maybe a week ago, I wouldn't be surprised if the S&P went to 2850. And I think breaking below 2,900, I think, is setting us up for this 2850 test. Might get there by this afternoon, the way the selling's going. Who knows?
Yeah, absolutely.
But it is definitely a rough start to the day, and we're going to dig into it for everyone here in just a couple minutes. But why don't we go ahead and get things started?
Absolutely. Let's look at our upcoming schedule. It's a good one. Tomorrow will be great. We're going to have, if I can see my notes here. Yes, tomorrow is Brian Livingston, from Muscular Portfolios. And then mark your calendar, because this Thursday, May 9th, John Murphy will be with us. It'll be absolutely fantastic to talk to him. I'm going to be doing a workshop on Tuesday. Not sure what I'm going to do it on just yet. And then Christopher Brecher will be with us on the following Wednesday. And I think he's going to be a very interesting guest as well. Today, we're going to start off, of course, after the technical news and headlines with Tom's seasonality report, and then that'll be followed up by the 10 and 10, with our first symbol being Occidental Petroleum. It was requested yesterday, OXY, and then I'm going to finish off the show doing technical scans. I am the one who loves to use those scans all the time, so I definitely want to share with you some of the scans I've been looking at. All right, let's get it started. Technical news and headlines.
Okay, there really wasn't anything in the way of key economic reports. I mean, it's been pretty quiet since the jobs report came out last Friday, but the 10-year Treasury yield, you can see, continues to decline. We've got the last 2 days moving down off of that 2.57, 2.58% high. That was Friday when the jobs report came out. That seems like a distant memory at this point now, with the 10-year Treasury yield rolling back down to about a 5-6 week low. That's just, again, more money rotating into defense, which is a little concerning. But I have talked about it in the past. I do think that this is more of the bond market simply telling the Fed to keep the brakes on. There is no reason to hike rates. Forget about the strong jobs report. We still have no inflation whatsoever, and there's no need to be raising rates. I think that's the message loud and clear from the Treasury market, and we'll see whether or not the Fed gets it. Looking at earnings today, we did have a number of companies reporting. Some bigger companies, but for the most part, not the headline names that we were accustomed to the last couple of weeks. We did get Anheuser-Busch out. They matched expectations at $1.27. Allergan, Emerson, Regeneron Pharmaceuticals came in a little bit short there, and the stock was getting hit. I want to pull that chart up and show you in just a minute or so. Sempra Energy, Ferrari, nice report there. TransDigm, this was a stock that I really liked a few months ago when they came out with their earnings. They came out with another solid report. Stock was trading up last time I looked. After the bell tonight, we've got Electronic Arts, Sprint, and a few others, including Lyft. That's their first public earnings report that will be released later this afternoon. All right, as far as some of the individual charts go, let's start off with Bud. So I'm going to bring this chart up. This Bud's for you. Stocks pulled back, but it has been in a nice uptrend. And I think as long as it holds the 50-day, you've got some price support around 83, maybe just over $83. 50-day moving average sitting at 83.26. So I think we got a little bit of downside here on the stock. But overall, this has not been a bad performing stock this year. Now, on a relative basis, if you're trying to outperform the S&P, it's been a little bit more difficult. We are trending up slightly versus the S&P 500, but you can see prior to that, the end of 2018, we really struggled with the stock. So it's been performing better, but it's got a lot more room to move to the upside to really strengthen its chart. AGN. We will try to get this one up, and I will tell everyone I have had some internet issues. So we'll see if charts want to come up. There we go. Allergan, not a very good report. But again, when we take a look at the relative chart, this is a stock that's been under pressure relative to its pharma peers. It's been under pressure relative to the S&P 500. So it did beat on its bottom line, but the market was not impressed. The stock down 4.5%. Of course, it's not helping when the overall market is getting hit the way it is today. But this downtrend has been a problem. A little bit of a symmetrical triangle. If I annotated, you could see the rising lows. Here, the declining highs. We're squeezing. And off of a downtrend, that can be a bearish continuation pattern. So we want to see which way it breaks. But if it were to break below these lows here, around 138, 139, I would view that to be somewhat bearish. All right, REGN. I wanted to bring this one up because this is a company that has, I think, could be potentially breaking down below some key support. You can see multiple tests around 330, another one here around 340. Today, we're trading at 323. The volume's heavy. News is out with earnings. It's in the biotech space, which has not been very, very good. And you can see that REGN relative to the biotechs has really struggled for the last 9 weeks or so, heading into its earnings report. Heavy volume on the selling. I think there were folks getting out of the stock ahead of this report. And obviously, the market not at all impressed by this miss on its bottom line. Race. This is Ferrari. And this is another one that this has had pretty good results, but it is in an area of the market that has been somewhat weak. You look at the autos, and I can go all the way down here. Autos on a relative basis underperforming the S&P 500. But Race has been outperforming the S&P 500, obviously outperforming its peers, and we found out a little bit why. They had a really nice report. Bottom line, $1.08 versus 89 cents. Not getting the breakout yet, so I think we could be in consolidation mode here between probably 130, which was the low yesterday, and the recent high up around 140. That's an area I would watch closely. One stock I did mention earlier, TDG. This is TransDigm. Here was that earnings report prior. Look at all the volume coming in on this move. I think there was a lot of anticipation in that earnings report. It did move up, printed a black candle, which would have suggested to me maybe a pullback and some consolidation, yet we kept going higher. Came out today with earnings. The stock is up 571, and given the way the stock market's performing today, that's like being up 10 or 15, given the relative strength that the stock is showing. You can see it has been a great performer within the aerospace group. I continue to like the stock. Again, they did beat on their bottom line as well. Okay, I want to pull up the S&P 500 because I posted something in my blog this morning I think somewhat important. If you look at this, and I'm going to show you the annotated version in just a second, but you can see back in March how in the middle of March we were going higher on the S&P 500, but you can see each time we printed a high, the PPO was getting lower and lower, and then we went down. Had a couple of days of selling, bounced off of it, went down, put in a double bottom, and then took back off again. We continued to move to the upside. Then we get into the early part of April. See the PPO dropping as prices keep going up. Now, this drop was not as steep, but we did go back down, reset that PPO at the center line. Notice that low over the next day or two held, and then we started going higher again. We go fast forward into the end of April. Higher prices, lower PPO, negative divergence. There's the selling. We get the bounce, very similar to what we saw back in March. The bounce, we go down and retest. The bounce, we go down and retest. This time, however, we have gone back down and we've lost this 2,900 level. Personally, I think that's why the market's a little bit more nervous this time. Obviously, the trade war is back in the headlines. We're also, it's May 7th, so we're beyond the money coming in, the money that rotates in at the beginning of the month, and the impact that usually has to the upside. And now, and I'll talk about this some more during my seasonality, but now we're moving into a period of May where the market tends to struggle. And look now at what's going on with the hourly PPO. The last couple times we've had the negative divergence and pulled back, even here when we went negative, we simply came down, tested, and then turned back up, and the PPO went positive. I see something a little different here. We broke down, came back up to the center line. We're rolling back over again with price, PPO setting a new low. I think you want to watch this declining 20-hour EMA. I think that's going to be a key area of resistance in the near term. And to the downside, I think we have to move now. I'm going to show you, before I move to that, I do want to show you the annotation here that I had in my blog. But here was the annotation, the negative divergences. And so heading in this morning, I wanted to see if we could hold this 2,900 area. And now when we look back, we can see we didn't. I believe in the near term, that's a little bit more bearishness now that we have to at least recognize. I think we go lower. So where do we go? Well, here on the hourly chart, I think as long as we stay below the 20-hour EMA, we need to be careful. On the daily chart suggests that we do have negative divergence. I'll try and get to this a little different way here. If you're looking at the daily chart, you can see the PPO is still below where it was even a month or two ago as we kept trying to go higher. I think we need a 50-day test, which we have not seen since we broke out above the 50 at the beginning of the year. We have not tested that 50-day moving average. Since the 20 crossed above, we really haven't gone below the 20 much. So I think we're going to go down and hit this 50-day. That also happens to be where we broke out the beginning of April after our last period of at least a little bit of selling. So I think 2850 is going to be a level where we head toward. Is it going to be today? Maybe, probably over the next couple of days. I think we'll get some rallies and then followed by some more selling. And who knows what the headline news is going to be with the trade war. But I did want to point that out, that I do think the S&P 500 is poised. Now, if we get a big reversal and have a hammer on the 20, I think we could have a different ball game. But if we close below the 20, I think we're setting up for that 50-day test. All right, Aaron, I will get ready for May seasonality. I'll let you take it away. Upgrades and downgrades.
All right, let's do this. Here we go. I've got 4 upgrades for you today and 2 downgrades. We'll get started first with Cone, CyrusOne Incorporated. technology company. Today, it was upgraded by Berenberg from a hold to a buy. They raised their target from $55 up to $69. So they're certainly looking for a breakout to the upside. I have to say, I like this upgrade. Technically, you've got the PMO buy signal. Notice the 50 is crossing above that 200-day EMA. That gives me a long-term trend model buy signal and basically puts Cone into a bull market configuration. We definitely have a bullish bias now as soon as that 50 gets above the 200. And notice also a little tiny flag forming here. Of course, that's a continuation pattern. If we get the breakout, the expectation is a move about the size of the flagpole, and that would certainly bring us up. Actually, I think it brings us very close to the target that they set at $69. All right, next one up. GWPH, GW Pharmaceuticals. Oppenheimer upgraded GWPH today from a perform to an outperform. There was no target. This is a really nice textbook breakout from a descending wedge, and it is a descending wedge is a bullish pattern. I haven't been seeing too many of these. I've been seeing more of the rising wedges, that bearish pattern, but nice breakout as expected. And then we have gotten above that top we had back in September. The PMO is not even overbought at this point, and you can see the improvement as far as volume and the scooter goes. Notice that we're rising on this rally to the upside in the breakout. We're getting higher and higher positive volume. Very good sign. Also, we got the big move to the upside here, but we pulled back already toward the breakout point. So I think that's also looking pretty good there. But remember, pharmaceuticals, biotechs, a lot of times they can be rather volatile. This one doesn't look too bad. Lamb Weston Holdings was upgraded today by B of A Merrill from a neutral to a buy with a target of $85 now. We had a declining trend channel that we saw price in, and it actually still is in that channel to the downside, which is a little bit of a concern for me. But we are seeing a little bit of improvement here in the PMO. It is trying to turn up. But as you can see, we had a fake out earlier on that rally. So I'm not feeling that great about Lamb Weston at this point. We're really not seeing an OBV that is telling us too much. I think that on the positive side, you could say that, the OBV has been really flat during this period of decline. So volume sort of held up through that period. But, low scooter, I'm not expecting this one to do well, but apparently B of A is. All right, let's see. Welltower will be our next one. And BMO Capital upgraded it today from a market perform to an outperform with a target of $86. Clearly, they're looking for all-time highs. I suspect that's all-time highs. Let's give it a peek. Yes, that would bring it up at least to multi-year highs. So let's go back to the daily chart. PMO buy signal, notice that nice improvement on the scooter. It looks like it's just about in that hot zone. We've got the OBV is moving in the right direction to the upside. I think my only concern would be just looking at the actual volume pattern. Looks like less interest as it's moved up, and now we're this last bar yesterday on the decline also is lower. So a lot less interest right now in Welltower, probably because it is a REIT. I'm not so certain, but anyway, it's still looking pretty good on that upgrade. Let's go ahead and look at a couple downgrades. First one, Barclays downgraded Boeing. I know there's a lot of interest here, from overweight to equal weight, and they lowered their price target to $367. Of course, we're already below that right now. Breakdown below the 200-day EMA, breakdown below these bottoms we saw in March and April, and the PMO sell signal, scooter, everything's going the wrong direction right now. I would be expecting more downside at this point, so I'm not liking Boeing. I think that technically makes sense to me for the downgrade. Fastenal, downgraded by William Blair from outperform to a market perform. So they're going a little bit more into that neutral category. I'd say that the next area of support would be around here at 60, looks like $63, $64. That would bring it below that 50-day EMA. And we do have the sell signal on the PMO. 5-day EMA is about ready to cross below the 20. That's a short-term trend model neutral. It's holding the 50, but I don't like the looks of this. It does have the strong scooter, but that does not mean it is not vulnerable to a big decline. You can see it was in that hot zone here and it still hit that big decline. So watch out for Fastenal. I don't think it looks technically that good. And apparently, fundamentally, William Blair doesn't either. That's all I have for upgrades, downgrades. I am going to pass it to you, Tom. Here is the list of what I went through. I will have this up in the Market Watchers Live recap if you wanted to look at some of those other upgrades and downgrades.
All right, sounds good. We are going to get into May seasonality, and I'll go ahead and show you first just the home page, and you can, kind of watch what's going on in the market. I want to talk maybe for the next couple of minutes and just give you some numbers. So there's not going to be anything really on your screen to look at, but some pretty important numbers nonetheless. When I look at May, first of all, the S&P 500 since 1950 has produced annualized returns during May of 3.17%, which ranks 8th of the 12 calendar months. And you might think, okay, well, that's not very good. I don't really want to be in the market looking for that. And I've said before, I'm not really a big fan of the go away in May theory. And the reason being, listen to the numbers on the NASDAQ. Since 1971, the NASDAQ has produced annualized returns of 12.83% during the month of May, which ranks 5th of 12 months. And the Russell 2000 small cap, since 1987, that index has produced annualized returns of 16.19%. So that's over more than 3 decades, averaging 16 or annualized return, 16.19%, which ranks 4th out of the 12 calendar months. So when somebody just says, you hear this blanket go away in May, you need to realize that the Russell 2000 performs extremely well in May. And on a relative basis, May and June, and I'll show you a chart to illustrate in a couple minutes, but May and June are very, very strong relative performance months for small cap stocks. All right, notable periods within the month of May, and I alluded to this earlier in the show. The S&P 500 from May 1st to May 5th, since 1950, those 5 days have produced annualized returns of 35.08%. But May 6th through May 25th, and today's the 7th, May 6th through the 25th, minus 11.95%. And then May 26th through the 31st, plus 34.29%. So you average all that together and you work your way back to that 3.17% number that I gave you on the S&P 500 throughout the month. But clearly there's a bullish bias at the beginning of the month and the end of the month. It's the middle of the month where the market tends to struggle a little bit. The NASDAQ, looking at the same periods, May 1st to the 5th, the NASDAQ has produced an annualized return of 50.15%, and that's since 1971. May 6th to the 25th, minus 4.30%. The 26th to the 31st, plus 44.60%. So again, and this is somewhat typical of what we see throughout all the calendar months. Beginning of the month and the end of the month generally are the most bullish periods of calendar months, and the middle of the month tends to be not as bullish, although the 11th to the 18th can be pretty good. 7th to the 10th, 19th to the 25th, those historically have been the worst periods of the month in all months. 7th to the 10th, 19th to the 25th. All right. I'm going to move on. I want to show you now some of the relative strength on the small caps. So here is the last 20 years. And if you go up here and you hit seasonality for the Russell 2000, then you can compare it to something else. And here I'm going to compare it to the benchmark S&P 500. So what this tells me is that over the last 20 years, the month of May, the Russell 2000 has outperformed the S&P 500 60% of the Mays since 1999. June, 84% of Junes have been higher. And here's the average return, the outperformance of the Russell 2000 versus the S&P. So for instance, over the last 20 years, the Russell 2000 has averaged outperforming the S&P 500 by 0.3 percentage points, and June 1.6%. That is by far the best month throughout the year. So when you get into May, June, while everyone's saying go away in May, I'm thinking you might want to reposition what's going on in your portfolio and maybe think about those small caps a little bit. As we pull up the relative chart, this is a one-year relative chart on the Russell 2000 versus the S&P 500. Look at the beginning of May, already starting to move higher, and we're coming off of a double bottom. I wouldn't be surprised to see this relative strength continue and maybe go back up and challenge these highs that we saw. So 6-7 month relative highs might come into play around 0.570. So I think in my opinion, it wouldn't be a bad idea to maybe more heavily weight the small caps. If I was trading the ETFs, I'd be looking more at the IWM and maybe a little less at the SPY, just because historically the Russell tends to outperform over the next 2 months. It doesn't mean I would sell all my spider and move everything into the IWM, but I might reposition and maybe weight a little bit more the small caps based on history and based on the fact that we are at about a 6-week, 7-week relative high right now. All right, let's take a look at some of the areas, some of the sectors that tend to perform well, or at least better, during the month of May. The first one is consumer staples. Now, when I looked at this originally, I looked and I saw only 40% of the time does the XLP outperform the S&P 500. But when you go down here to the average return, you can see that we actually go up more than the S&P 500 by almost a full percentage point on average over the last 20 years. And May, in that regard, trails September. That's the only month that it trails, meaning that the consumer staple area outperforms the S&P 500 by a wider margin in only one other month besides May over the last 2 decades. And that's been September, when we have a lot of fear in the market historically. I think there are a lot of traders, a lot of portfolio managers that get more defensive because it's almost like gearing up for hurricanes in the southeast U.S. That's when the tendency is to have a hurricane. It's also the tendency where you could see some selling, some more serious summertime selling in the stock market. So that makes sense that you would see more money rotating into defensive areas. I think in May, the reason we see this outperformance is because of the media onslaught of the go away in May. I think folks tend to get more, I think they tend to get more conservative, move more into staples. And so when we do underperform in the market, staples tend to have a really good period of relative outperformance in those months. And when the market goes up in other Mays, I think consumer staples, for the most part, maybe trails a little bit, but kind of goes along for the ride. That's my theory based on how this has performed historically. But I don't think we should overlook the fact that as you go through the summer months, May all the way through September, we have relative strength in consumer staples. And as we go further and further along throughout the summer, and I think I posted this in my blog this morning under the historical tendencies section, as you go throughout the summer, the stock market returns, annualized returns by month goes down every month from now through September. So as we get deeper and deeper into summer, the market tends to do worse historically or seasonally. So that all leads to some outperformance by defensive groups in general and consumer staples more specifically. Next up, XLV versus the S&P 500. So here's healthcare, another defensive group, and I want you to take a look at May and June. May and June, even in April, starts picking up, but May-June period tends to show a lot of outperformance in the healthcare area. And there are your average returns, average outperformance during May and June versus the S&P 500. So this isn't just telling me that healthcare is going up by this average. It's telling me that healthcare is outperforming the S&P by these percentages over the last 20 years. All right, let's pull up energy. Energy tends to do pretty well in May and June. You can see outperformance. But what I wanted to point out here is that we know the last 8 years, the US dollar has been in an uptrend. So if I forget about looking at the last 20 years and I just go back the last 8, look at what May has done. May has only been up 25% of the time. May has only outperformed the S&P 500 with the XLE 25% of the time. And the average underperformance the last 8 years has been almost 2.5%. That's the XLE underperforming the S&P 500. So while May tends to be an okay month for energy, I'm not going to buy into it because the dollar has been so strong. I think to trade energy or materials for that matter without considering the dollar, I think is a huge mistake. So again, the last 8 years, not so great here. So, which brings me to materials, because I'm not really going to talk too much about what lags in May, but I did want to point out over the last 20 years, the XLB really struggles in the month of May, only up 35% of the time versus the S&P 500, only outperforms the S&P 35% of Mays going back the last 20 years, and the relative performance is flat. But what happens if I just look at the last 8 years while the dollar has been moving up? Look at that. Only once in the last 8 years have materials outperformed the S&P 500 during the month of May. So with the dollar continuing to be in an uptrend, I would stay away from materials. I would stay away from energy. All right, now let's move on to some industry groups. So I am going to take a look here at, let's first pull up and all of these industry groups, by the way, are included in the sectors that I just talked about. So these are all in the consumer staples and healthcare. All right, this is the distillers, vintners. So if you look back last 16 years, look at this little peak. March, April, and May. Also June, pretty nice performance. Now, I don't have this relative to the S&P. So if you want to see how it does relative to the S&P, then we can look at it this way. And you can see that the relative strength actually picks up May and June. So I believe that the distillers, vintners, is an area maybe to keep an eye on. If we go back here, see if I can pull this up. Look at what's been going on here in April. We got a nice breakout. This is a group that's trending higher, and we know the seasonal strength is there. So when we're looking at the seasonals and we see, okay, the next 2 months tend to be very strong. This tends to be very strong relative performer. And we go back to the technical chart and you can see the technical chart lining up. I think that's kind of a win-win for the distillers and vintners. We're going to go over a poll here in about 15 minutes, 20 minutes or so. But today's poll is kind of looking at this, except it's giving you individual stocks. It's saying, okay, here are some stocks that really enjoy the month of May. But technically, what do you think based on those charts? So we'll go over that, and I'll give you my thoughts on those stocks at the very end. But this is one of the groups that I believe Constellation Brands is one of the stocks in that poll, and it's in this group. And you can see the distillers and vintners very strong right now. All right, next up, let's go with food products. And if we drag this back, you can see over the last 20 years, food products have outperformed the S&P 500 60% of May's. And the outperformance, average outperformance in the month of May, 1.7%, better than any other month of the year. So food products we want to take a look at. How about soft drinks? All right, soft drinks over the last 20 years, May, 1.4% outperformance. June, 0.7% outperformance. Add those two together, 2.1%. If you look at any other consecutive months during the year, these are the two best months for soft drinks on a relative basis versus the S&P over the last 2 decades. All right, tobacco. Now, I'm not a big fan of tobacco, so I'm not going to really look at individual stocks, but I did just want to point out that in the month of May, you can see that we do tend to have really strong outperformance, but it kind of stands out there by itself because March wasn't good, April's not good, June's not good. It's just like May is there, and I don't like the group technically, so I am ignoring it for purposes of today's session. Medical supplies. And let's try this again. All right, medical supplies. Now, just looking at the absolute performance, you can see May 70%, June 63, July 74. So I was talking earlier about the fact that the market tends to have worse performance as the next few months, kick in. This is a group, medical supplies, that actually does pretty well over the next 5 months. And if we pull this up relative to the S&P 500, first of all, look at the last 5 years. 4 of the 5 years, May's gone higher. All 5 years, medical supplies have outperformed the S&P 500. Look at the relative performance. So we know the last 5 years have been strong, but even going back the last 20 years, look at these 2 months just kind of standing out. Little pedestal there. So I think medical supplies is an area that we should be thinking about. And when we take a look at the chart, look at medical supplies just recently making this breakout. So this is a group that technically looking much stronger. And then when we look at the historic, seasonal charts, this is a group that tends to do really well over the next couple months. All right, just a couple more here. Let's look at the healthcare providers within healthcare. And we'll take a look at it versus the S&P, maybe. There we go. And over the last 20 years, look at May and June. Now, I was looking at healthcare, and I wrote about this in my blog this morning. I think there's still some work to do, but one thing that's unmistakable is this is not a light volume move back. This bounce is not a light volume dead cat kind of bounce. This has been on some pretty good volume. I think that on a relative basis, we still have some work to do in healthcare, but just keep in mind, if we get back through that 50-day moving average, PPO turns positive, this is a group that loves May and June. And then the last one I had before we get into individual stocks were the biotechs. So if we look at the biotechs relative to the S&P, you look over the last 20 years and you can see May pretty good. June only 47% of the time, but look at the outperformance of these 3 months as we go forward. May 1%, June 2%, July 3.5%. Now I think it's too early because I don't use seasonality as my primary reason to get into an area or to get into a stock. I use it as a confirming signal or a secondary signal. So what do the biotechs look like? I mean, we've talked about it on here quite a bit. They've got work to do. And you can see after breaking down below this support level around 1950, we went up, we tested that level, we've turned back down. I would at least wait for a close back over 1950 and back above the 20-day. But if we get that, this is a group that's like semiconductors. When it moves, it can really move. Might be worth taking a look at some of the biotechs. Maybe the ETF, the IBB, something like that, or individual stocks. And I'll pull up a couple of those in just a minute. But given the relative strength that we typically enjoy during the summer months, and this relative strength, by the way, continues all the way through September. So when the overall market continues to weaken, biotechs tend to outperform. So this is a group you want to be considering in your summer portfolio, especially if we get that technical breakout. All right, so what individual stocks should we be considering? We're going to pull some charts up, but first I want to just show some of the seasonality numbers on some of these stocks. So Constellation Brands, and I do believe this is in your poll, STZ, going back the last 2 decades, you can see more than 50% of the time it's higher. April, May, June, very, very strong. And when we go back, take a look at the chart, look at what happened starting in April. That's when we got the breakout on Constellation Brands. So April, May, and June, we know historically have been strong. April followed suit. I'm not saying I'd go jumping in here in May, but if the market's weak and maybe we get a 20-day test, Constellation Brands would be a pretty nice reward to risk trade, especially given the fact that it tends to perform really well this time of the year. All right, another one, BF/B. I think this is Brown-Forman. Let's go back the last 20 years. Look at May. That kind of stands out to me. Averages 2.8%, which is one of the best months of the year. And you can see it has gone up 4 out of every 5 months over the last 2 decades. So that would be 16 of the last 20 years. Tyson Foods, TSN. I just wanted to point this out. March, April, May, you can see that tends to be a really strong period. Tyson Foods is it's a consumer staple, but it is averaged going up 10.5% in these 3 months over the last 20 years. And when you look at the chart, remember March, April, May, we pull this up and look at March. I'm going to go back and show you a year chart, because once we made a breakout, see all this sideways consolidation? Beginning of March, we make the breakout. Now, you might look at it at the end of March and say, well, it's gone up too much. I don't want to consider it for April. Well, it's kept going up. Do you want to consider it in May? Well, historically, it tells us we want to consider it in May. So pull back on this one. 20-day test, another one I would be watching closely. They just came out with very strong earnings, by the way. I think it was yesterday or Monday. Okay, another one. MDLZ, another one in the food products area. All right, last 20 or 19 years, April and May. Look at that, those 2 months. They kind of stand out to me. Average 5.4%. Monster, moving into the soft drinks. Monster has just been a great performer over the last 20 years. I mean, when I look across here, it's gone up on average in every single month. Not too many stocks have done that. So this has just been a great performer overall. But look at May, 8.2%, best month of the year. So Monster is a drink not just to maybe enjoy, but also to think about the stock as we head into or throughout May. Pepsi. Pepsi, you can see going back the last 20 years, tends to like May. It's been up 70% of the time, up 1.7% on average. Pretty good month. Coke, same thing. I think Coke actually is 2.1% in May is the average, I believe. And there it is, 2.1%. March, April, May tend to be strong. It tends to hold up okay over the summer months. A couple of down months, but for the most part holds up. But May is strong, and Coke is also one of the stocks in the poll. Let's see, just a few more. These are large cap stocks, by the way. I'm going to also give you a few small cap stocks to consider, since small caps tend to do well the next couple of months. But here is X-Ray. Just came out with pretty good numbers. You can see April and May really standing out. Align Technologies. This is in that medical supply area. So if medical supplies continue to do well, look at May here. Average is going up 68% of May's, and averages 4.8% over the last 19 years just during the month of May. And Edwards Lifesciences, this is one that is really fascinating because when you look across here, this is another one that does pretty well throughout the year. October's a bad month. All the others are positive. But look at May and June even. 2/3 to 3/4 of those 2 months, we go higher. The average return just in May and June has been 7.5% over the last 20 years. So you take a look at Edwards Lifesciences, EW, and I think the stock, after making a breakout and gapping up, came down, but I think it's actually starting to strengthen again. I think we get back through that 183 level. EW, I would think, looks pretty good. It loves May and June. So the uptrend's in place. I know it just recently pulled back, but I still see an uptrend. And I would not, and a couple of long tails, by the way, which tells me there's some buying going on. I wouldn't be surprised to see this stock make another run for 195. DGX. %80 of the time over the last 20 years, it's moved higher in May. Nice 2.5% return. Look at June, also another 2.8%. So Quest Diagnostics, I think, looks pretty good. And the last large cap that I'm going to go over, and then I'll give you some small cap names. This one's only got 7 years history, but look at May, June, and July. 4%, 1%, and 9.4% over summer months. That's 14.5% on average that this stock has gained over the next 3 months as we look back over the past 7 years. And so IQV on a chart, I still see it holding this gap support right here. I think it's sideways consolidating, knowing that it tends to perform well here over the next couple months. If we got back down to this recent support level, I think your reward to risk would be really strong. And the seasonality would back up a position. You could always keep your stop tight. All right, so how about some small cap stocks? I'll give you a few here. In the food space, Sanderson Farms, which is SAFM. Going back the last 20 years, it's gone up 75% of May's, and it's averaged going up 7.4% in the month of May. RMTI. Looking back the last 20 years, May and June have averaged going up 9.3%, 6.6% in May alone. All right, MMSI. And by the way, all of these stocks, with the exception of this one I'm showing you right here, all of these stocks have scooter scores over 50 at least. So they're not going to be stocks that are, in serious downtrends. This is the one exception. I think the scooter on this one was around 40, 45, but I couldn't not mention May, June, and July. You can see May, June, and July very strong. This stock averages going up almost 20% from May through July over the last 20 years. And so if we pull up Merit, MMSI, and I think this one was on the poll as well, you look at it, there's really not a whole lot going on here. But if it were to maybe get back up here through the 50-day, knowing what I know about May through July, it starts to look a little better technically. This might be something to consider. Or let's say we pull back down closer to this 54 area. Knowing what we know about the next few months might be worth taking a chance near support. All right, NEO. This is one hasn't been around as long, and it just has a tremendous track record, but it is very volatile. Look at the spikes. It almost like 1 month solid, next month not. 1 month solid, next month not. I don't know that how I feel about this. I don't really trust it because it's not a group of 2 or 3 months in a row of real strong action. But over the last 17 years, I did want to mention the stock average is going up 17% during the month of May. So at least worth noting. ENSG. This one is in the healthcare providers group as well. Last 13 years, May, June, and July, very, very strong. Over 14% average return during those 3 months over the last 14 years. So ENSG is certainly one to consider. EHC, last 20 years, May only 45% of the time higher, but it does average going up 5% during the month. June, 7.6%. July, 9%, even though it only goes up 37% of the time. Really strange that it doesn't go up more often, but apparently when it does go up, we see big, big moves to the upside. And if we pull this chart up, and I'm just going to show you one more here after this. But if we pull the chart up, it looks to me like maybe a character change. Downtrend, we get a move up, volume's picking up. Now it's holding the 20-day, moving back to the upside. Knowing the history of this stock after a downtrend and now starting to pick up, knowing healthcare providers does well over the next few months, I could make an argument here. And then finally, we'll go back and look at VCYT. Only 6 years, I think, here. No, 7 years. But look at May and June. 17.2% averages going up May and June. They just came out with strong earnings. This is a stock that I know is on my strong earnings chart list. So when I get one of those stocks, and I also have solid seasonal pattern coming up these next 2 months, look at the volume trends. I think you got an uptrend, maybe a cup, and then a pullback here, consolidating a breakout above 27. And this stock could really run. All right, those were the stocks. That's all I wanted to go over today for seasonality. Let's get your summary. You can see it right there. Talked about the index, leading sectors, industries, and then many stocks to watch. So hopefully that gave you some ideas. And so let's move on to the poll real quick. And Aaron, I don't know if you had a chance to take a look at any of these stocks.
I did. And to be honest, I didn't really like any of them. So I just took the one I thought was the least offensive. I think that's too much of a bad word, offensive. But no, the one I didn't, that I liked the best of the worst, I guess. So I picked Constellation Brands with everybody else. It just had a 5,200-day EMA positive crossover. I just don't like it because the PMO is way overbought and turned down. And I think it's a matter of time frame with that one.
Yeah, I actually, looking at the chart, I think I'm going to go with, boy, this is a tough one.
Mm-hmm.
I think I'm going to go with Edwards Lifesciences, the second pick there.
Okay. Illumina, I think, was my second choice, but
yeah, Illumina was put in there, and actually that was a stock I was going to look at because it does have some pretty good seasonality next few months, but it was one that had the scooter rank way below 50. It just hasn't been a great performer of late.
Mm-hmm.
And so that's why I didn't end up going over it. But definitely, I think when you look at the chart, it's sitting about where it was beginning of March while the market's been going higher. The problem with Illumina is it's in the biotechs, and the biotechs haven't yet done anything. If we can break on the biotechs, the upside, I agree with you. I would go with Illumina. But I think Edwards Lifesciences is the one that I like, just because it is in that uptrend. I think we're going to stay above that 20-day moving average, and I really like the summer seasonality there. So I'm going to go with EW.
All right. So which sectors do you think are going to usually perform the best in May?
Well, staples, because I think everyone talking about go away in May, I think that sends a lot of folks into more defensive areas. So I think consumer staples benefits from that. But I'm really expecting, and maybe I can bring up one more chart before we get into the 10 in 10. I'm really expecting the healthcare group, because this is a group that has done well historically on a relative basis. I'll show you a chart in my blog. Hopefully you got this up here now. It's a 5-year weekly chart of the XLV, and I think you're in an uptrend. I know, we've seen a lot of problems last year, end of the year, healthcare struggled, and then of course we had the issues for a couple of months with the healthcare providers. But I think we're consolidating an uptrend and in very bullish symmetrical triangle fashion. So
Mm.
I actually think we're in a bullish pattern. And knowing that historically this is a group that performs pretty well over the summer, I'm looking for a breakout to confirm. But I think the XLV is going to be the best performing area.
All right, because I'm going to do scans at the end of the program. So I'm going to scan a few sectors. So I thought I would find out which ones I should scan.
Yeah, I would definitely look at healthcare. I think that's some opportunities. And some of those stocks, like I said, I'm waiting, like biotechs. I don't want to just jump in when they're technically weak. But if they start to show a little bit of improvement, this is the time going over the summer when they tend to shine. And Illumina, for those of you who picked Illumina, that could be a great time to take a look at a stock like Illumina if the biotechs move.
Yep. All right, 10 and 10.
All right. Do you have an RRG?
I sure do. And there it is. All righty. Not a huge amount of requests today, which always means that the first segment was especially interesting. At least that's how I read it. As far as sectors go, technology certainly the one people want to look at. We'll try and take a peek at a few. I think Hexo looks interesting on the RRG as well as AIG. So I think we'll be looking at those two for sure. All right, let's go ahead and get started. Tom, Oxy.
Okay, Oxy. Let me see if I can get this up. Well, it just does not want to go for me today. Yep, it is struggling. Hold on one second.
Just one of those days.
Yeah, I think it's just my internet. Something is going on with my internet, and might have to re-annotate it because I can't get it to come up with the annotations. I mean, looking at the chart here, the big problem I have is that look at the volume coming in on Occidental Petroleum as it's been moving lower. The good news is it's getting close to the prior low. So if you want to, if there's a silver lining, maybe we're going to bounce off of support. So you could use that as a trading range. But if I broke below $56, especially on big volume and close there, I would definitely not be interested at all in hanging on to this one. So, it's in a group that's been underperforming. It's a stock that's been, going down on heavy volume. So I would stay away from it.
All righty. Let's see. Next one is the most popular, although there was a tie. So I'll be looking at those other two, but Twilio, let's do TWLO.
Yeah, I like the stock. I just think if the market pulls back, we might continue to see a little weakness here. But I would be looking at the recent lows. I don't think we go back below that 120, 121 area. The recent high was the gap up with earnings, heavy volume. Bearish engulfing, that tells me generally that we can expect a little consolidation. So that's the trading range that I would consider for now. I'd buy on the low end and sell on the high end until we get a break one way or the other.
All righty. Let's see. Next one up will be WDAY, Workday Software.
All right. WDAY. All right, I think it's going to be very similar. This is another one that I think recently, maybe it's coming up with earnings in a few weeks. I think this one is a little later in earnings season. But I still think we got essentially the same thing. I would be looking probably at the support level here. I mean, we could go down maybe one more level off of a gap up. You can see that level held around 178, and then we tested it again, tested it a third time. So I'm going to say the upper 170s to about 185 would be the low end of a trading range. 205, 206, 207 upper end, and that is the range I would play for now.
All righty. Let's see. Next one up will be that one I thought was interesting on the RRG, Hexo, HEXO.
All right, Hexo. Yeah, I think this is another one that Greg Schnell had mentioned when he was on the show last week, showing a lot of positive momentum. I thought it was a little overbought at the time, but I actually like these 20-day tests when they're when it's near price support. So I would say right there, you can see the breakout, heavy volume, pulled back. I think this one back down around 720, 725 is a really solid reward to risk entry. So that's where I would look to enter if I was interested in the stock.
Okay, let's see. Next one for us is financial AIG.
All right, AIG. Yeah, they reported earnings, and I do like this move here. Let's see if I can get the relative charts up. Yeah, I like this move because the overall group has been moving higher, and now we're seeing relative strength. This is a breakout to a 6-month high on a relative basis. So annotating here, a couple things that I would point out. Now, so far we're printing a doji, which tells me maybe we're going to have a pullback. A lot of indecision. That's what a doji tells me. If we move back below today's low, then I would look maybe for a gap fill closer to that 47 level. So let's see if we can hold on to today's low right at $50. If not, I would be looking for 47. If we hold it, then I think we got a shot to make move back up above 54 to challenge the highs that we saw in the second half of 2018.
All righty. Next one up is WTFC, and that is Wintrust Financial.
All right, WTFC.
Yep.
There we go. Okay. The relative weakness would probably keep me out of the stock. Banks overall have been downtrending still versus the S&P, and this is not one of your better performers in the banks. So really, without getting into too many specifics about the absolute chart, I'm just not going to be a fan because of, whoops, it's not what I wanted. I am not going to be a fan because of the relative downtrends that I see here. Banks versus the S&P, and then WTFC relative to banks. So we're in a weak group and we're in a weak stock within the group. So there's just not a whole lot. And I would say if I'm already in it, what I say is when you're in a weak stock in a weak group, you don't really want to see any breakdowns of support. So I would say you already broke below what I would consider price support. The breakout there should have triggered some support there. You can see how we're kind of struggling to hold on above that. But that 20-day moving average, I think if you close below 75, I'd be out.
Okay, let's see. ABBV.
All right, ABBV. Yeah, the relative performance here is not strong. The overall trend of the stock is down. It's in the biotech space. We talked about that. I don't really want to go over that again. But I would just say this. I mean, you've got a downtrending stock in a weak group. So as long as that continues, you've got gap resistance you're gonna have to overcome right there. So you see that gap down on heavy volume here. Came back up, couldn't quite get up there, and then reversed back to the downside. I think that's the key area of gap resistance. And right now we got in the middle of it, couldn't get through. If this stock gets back through 85, then I think we have something to talk about. Until then, I'd look elsewhere.
All right, here is a medical supplies company, Anika Therapeutics, ANIK.
Yeah, this is one that I think I was looking at earlier, and I think it was in the seasonal. I think because when I looked at it seasonally, it was a pretty good performer, but I was a little nervous about the volume. Today's volume, you see, only 78,000 shares, and some days, it only trades 100,000 or so. But I do like the action. I mean, the volume did pick up on this move to the upside, and I think if you look at it long term, this is a stock that can be extremely volatile, and you can see some of these relative declines here, and now we're getting the relative spike here. We saw it over here as well. It's a lot of mixture in this stock for me. So I would avoid it just because I don't feel like I can trust it. If I'm looking for some key levels, I think that 43 area is going to be important, and then top of gap resistance 46. So those are the two levels to watch to the upside. Downside, we opened at 36, traded down, and then moved back through 36, which for me now suggests that should be a pretty good solid area of support. So I think it's in this range, but the volatility would probably keep me away.
Okay, let's see. All of our technology requests were software, except for this one in electronic equipment, OSIS, OSIS, OSI systems.
Yeah, this one came out with another solid earnings report to back up the one we saw in January. Love the volume, this huge hollow candle. When I see hollow candle like that, I immediately think top of gap support as my area to consider on a buy. So that's what I would be looking at. Now, I do a lot of times look at the intraday low because that's where the buyers returned after we started selling intraday. Then we came back in, buyers picked up. And notice the 20-day moving average coming in right in the middle of that area. I don't like to chase. I mean, this stock could keep going higher, but this is a stock that would be on my, I believe they beat top and bottom line. And if so, it would be on my strong earnings chart list. And anything back down into the mid 90s would really start to get my attention.
All right, let's see. The last one was also in the most popular category, Guidewire, GWRE.
All right. Yeah, I like the stock. I think this area right around the 20-day has been pretty solid support recently. Went below it yesterday, but held. I think this intraday low I'd watch maybe in the near term. Seems like that's where all the buyers are coming in for the stock. So I think if you just draw the line right in there, if we were to move much below 100, I mean, I guess from a closing perspective, you could give it a little bit more room. So maybe after I looked at it here, maybe consider building a position 100 down to about 98, 97 and a half. Target would be up around 107 and a half. And I'd keep a fairly tight stop. I don't think there's any reason for this stock to close below 97 and a half.
Okay, and that does complete the 10 in 10. Here are the symbols that Tom just annotated. I will have those charts up in the Market Watchers Live chart list. Just go to the blogs tab, articles tab, click on the Market Watchers Live blog, and the link to the live chart list is right there at the top. And of course, it's in every one of our Market Watchers Live recaps. All right, time for our final market update. Let me give you a look at what is going on right now. And here we go. Markets are down. I think we all knew that. That's not a big surprise. At this point, we're looking at intraday lows, however. Dow Industrials are sitting right near their near the intraday lows. S&P 500, same. Looks like, I mean, those intraday lows, it looks like we might just be moving a little bit sideways off of that. So maybe we found the actual low. The NYSE is also down on the day, down over 194 points. Russell 2000 small caps also not doing well today. Looks like a reverse flag right now forming, could mean some more downside. TSX hit the intraday low from yesterday, does seem to be holding right around that area, down 153 points. TNX treasury yields are down slightly, 2.457% current reading. The VIX rising and rising with all of these declines in the major markets. Currently, it is reading at 20. That is a pretty high reading for the VIX. UUP, we're seeing rising slightly, up 5 cents to 26.23. GLD also rising, up 43 cents, 121.24. USO, big gap down, but seems to have found the intraday low after setting up this big tail. Now it looks like it's heading to the upside. TLT bonds continuing the upside trend that started last week. As you can see, with a rise right now of 89 cents at 124.89. Sector summary, who is in the lead? Well, nobody is leading unless you say who's doing the least worse. That would be utilities. That one is down just under 0.25%. Currently, the technology is the one really taking it hard on the chin here, down over 2.25%. You can see utilities, staples, real estate, all three of these in the defensive area of the market. And those are the ones that are performing, well, not well, but the least worse of them all. So that's all I have. Tom, I'm going to pass it back to you and get ready for some technical scanning.
All right. Yeah, I just wanted to illustrate what I talked about earlier with healthcare, thinking that we're going to continue to bounce and move higher on a relative basis. This was 2019. You can see the XLV versus the S&P 500 really took a tumble. It had been strengthening throughout the balance of 2018, but came all the way back down. Looking at the last couple of years, you can see got pretty close to relative lows where we have seen healthcare start to rally. We saw double bottom at the end of 2016, early 2017, and you can see the relative strength that led, that built up over the next several months. I think that we're going to continue to see this relative strength. I love the fact that we've gotten back up above that 20-day EMA. Every one of these other tests, when we first got up above, we came right back down below. This one seems to be sticking. So that's another reason why I would be favoring the healthcare group as we go into the summer, and the fact that it is defensive, and the summertime tends to favor some of the more defensive areas. So I am going to pass it back to you, Erin, for your technical scans. Take it away.
All righty. And as you did say, the healthcare sector looking well, the most healthy coming into May. I'll do a scan on that in a little bit. I'm going to start off our technical scanning with, I'm going to go down to the link that I have here. And I don't know if you have this link, so I'm going to show you where else you can get it. But I'm going to start with the predefined scans. I think that's the best place to start. You can also find it on the charts and tools page. Just scroll down here on the right, and predefined scans and technical alerts. So let's go ahead and look at those. These are scans that Stock Charts runs continually throughout the trading day. And it will tell you, obviously the various indicators you can use. And then of course it tells you how many in each category, for example, are making new 52-week highs. And you can sort by what we have here as far as NYSE, NASDAQ, etc. This column tells you how many more or less we have this particular day versus the other day. And then we also have the bearish predefined scans. So I'm going to take one. I'm not going to take a bearish one. I'd prefer to take one that is bullish right now. And I'm going to look for something that just has a lot of results. And at this point, I'm going to come here and we're going to look at NYSE. Right now, 61 new 52-week highs on the NYSE. So I'm going to take these. Now, here's the scan results, but I can't really do anything with it. I can sort it a little bit here, which is helpful. But I really want to be able to see these in candle glance. I don't want to have to go through each and every one of these charts to see which one looks the most interesting to me. So I'm going to go and put it in a chart list because then I can manipulate it. I talk about this all the time. Our regular viewers are probably sick of hearing it, but I recommend that you have a folder called, or a chart list called Scan Dump. Make it your transient chart list. Anything that goes in there is just not going to get saved unless you pull it out of it. It's a great place to put the results for your scans. And so I love this. This was an idea I got from Greg. I can't take full credit. All right, so now we have that list. As I said, I like to look at results from scans, especially when I have a lot of results. I like to go into my candle glance because it shows me all of the things I want to know about a stock. And here are the results that we have currently. So what I want to do is look for the ones that suit me as far as chart pattern, if there's something interesting about it that makes me want to look further, as far as possible trades that you might want to make. So I'm going to look at, first of all, looking at the PMO. BlackRock, this particular one, BFC, I wouldn't want just because of the way the PMO is acting. We've got a sell signal here on this one. We do have a buy signal, a possible flag on Black Hills Corp. So I'm going to pull this one up, BKH. All right, short-term flag, PMO buy signal coming in, and nice scooter. So this scan did me pretty good this time. Let's go ahead and annotate it just a hair because it is looking at highs here. It did break out. We're not able to hold that breakout just yet, but the buy signal tells me that we should expect it to work. It is in the utilities area, which is a defensive sector. And as you can see, those have been leading. At least they're performing better than the others. Now I could save my chart here with the annotations, but remember I put it in scan dump. So I have to remember that if I really wanted to save these annotations, I'd want to put it in a different chart list. All right, let's go back to our candle glance. I'm going to go to the last page and let's see what we have. Okay, it looks like a tiny breakout trying to occur here on the Invesco Municipal Opportunity Trust, VMO. So let's take a peek. We've got the PMO on a buy signal. OBV volume is looking pretty good. It's all positive here. I do get a little nervous when I start seeing declining volume, though, on an uptrend. You want to see that either staying about the same or moving up with it. But the OBV is telling me, because we've had all these up days in a row, I shouldn't be too concerned about that. Let's do a little quick annotation here. And again, breakout is being made, not quite there, haven't held it, but certainly one that maybe you want to put on a watch list. All right, we'll go back to the candle glance. Let's look at page 2 real quick, and then I'm going to show you how you can manipulate this. Because as you can see, there are some in here that look interesting. The PMO is set up pretty nicely. Not a surprise. Remember, this scan is looking for stocks that were making new 52-week highs. So I would expect to see the PMO on buy signals or positive crossovers. But if there aren't, as we can see over here, there's still PMOs in decline. That could be a problem for me. I don't want to look at these. I know that they made new 52-week highs, but I don't trade stocks that have a PMO that are in decline. So what can I do? I've got 61 stocks here, and I don't want to have to go through all of them necessarily and hit the little trash can every time I find one that I don't care for. I mean, that works, but I want something quicker. So what I will do is we're going to go back to the predefined scans. And I'll do it from here because I do have my scanning block here on my home page. So we're going to come back here, and I'm going to take the same scan, and we'll look at, actually, I'm going to pull all of them, because what I'm going to do is manipulate this scan. I'm going to make it my own and put in the kind of things that the parameters that make sense to me, so I don't get things that I don't want. There's a lot of choices here, right? There are 176. However, there are a lot of exchanges maybe I'm not interested in. There might be a couple that have closes, like penny stocks, and I'm not really interested in. So I need to edit this scan. So all you have to do is click edit the scan. Here is the actual scan language. It's a very simple scan to see which ones are making new 52-week highs. But I want to check out, I want to keep, like I said, I want to keep this fresh. I want to look at the stuff that I like. So I was going to do, remember Tom told us that healthcare was a good sector going into May. So I'm going to scan on healthcare. And there it is. All I do is add that. And then I'm also I want to also look at the staples area. So I'm going to put both of these in here. All right, this is not going to work as a scan, just telling you right now, because do you have stocks that are in both healthcare and consumer staples? No, as far as I know, you do not. So I'm going to make this an or. That way it'll give me healthcare or it'll give me consumer staples. And we're going to look at just the ones that are making new 52-week highs. But I also want to add in, let's see, let's add something in with the PMO. Make a technical indicator here, and it happens to be right in here. I know it. There it is. All right, so I'm going to add this PMO to it, PMO line. And what I think I'm going to do is I want it rising, so I'm going to want the PMO line right now greater than the PMO yesterday's. So I'm going to say today's, and then I'm going to copy this and put it here. And I'm going to say yesterday's PMO line. Okay, let's make sure I got that syntax right, crossing my fingers. Yes, I got it right. Okay, so we're going to look for PMOs that are rising in the healthcare and consumer staples sector, also making new 52-week highs. All right, let's cross our fingers that we get something good here. More than 2. 90 results from there. Okay, excellent. But I'm seeing that I'm getting exchanges. I'm getting, let's see, I'm getting exchanges that I'm not interested in. I'm still getting a couple stocks that are a little on the low price side. So let's go back to that scan. Actually, I'm going to go to one of my older scans because it has the stuff in it I like to use. Hopefully I'm not going too fast here. So let's go look at that. So here's how I keep the penny stocks out, and here's how I keep it to, U.S. stocks. I'm narrowing down the universe with a decent amount of volume. So I'm going to copy this, and we're going to go back to the scan I'm working on over here. And I'm going to add this in here. Now, I already have that it's a stock, so I'm just going to take that piece out of there because it's already up here. And then this one and this one, right? They look the same, only the difference is the volume number. So I'm just going to take this out as well because I already have it up there. So that way I'm going to stick to countries in the US. I'm going to keep out those penny stocks, and I still get to have those 2 sectors. So let's run the scan now. And here are our results, 85. But now let's see, that doesn't look right. Let's try this again. $85. Still coming up with different exchanges, but we're not getting any penny stocks anymore. I can deal with that. So we're going to replace that list that we had before, the scanned up. And remember, I made some annotations to some charts in there. Well, that's all gone now, but that's okay because I knew that's what would happen. All right, so let's look at these in Candle Glance, the way I like to look. And now notice all the PMOs are doing the right thing. I'm seeing stocks that aren't, only $1 or 50 cents. We're getting a couple that are under $10. Well, there's one that's actually an OTC. Not sure why this is not working the right. It's not taking it right. Let's see. Type stock close should be greater than 10. So I'm not sure why that is not working. Okay, check syntax, yeah. Take this out. All right. Well, I'm not really sure why it's doing that. I apologize, guys. I'll have to look at that scan a little more closely. All right, so where were we though? Let's look at that scan dump list and see if we can pick out a couple more stocks that look interesting. Candle Glance. All right. Okay, so interesting looking charts here. So far, I'm not really seeing anything that's popping out at me. I'm looking for some decent chart patterns here. Okay, here's a breakout and a pullback, possible flag. Fomento, FMX. So let's take a quick peek at this one. Look at all those positive crossovers on the EMA at the beginning of this move to the upside. PMO is starting to show a little deceleration, but that's to be expected. It's pulling back right now to the point of its breakout. Breakout right here. There's that short-term breakout that we saw. Now it's pulling back toward that breakout point, which is, again, what we like to see. The one thing I don't like to see is notice that this top is matching up with the top here. It got to overhead resistance and immediately was turned away. So that's a little suspect. But, the OBV and the scooters are going in the right direction. Maybe we'll watch and see if it has to go to the 20 to test support. But it's looking pretty good right now. FMX. And let's go back and see any other ones. Hain. Celestial, that looks interesting. All right, PMO is turning up. Notice that we had a positive divergence here for the OBV. You have declining bottoms here on price, but you had rising bottoms on the OBV. Those are really good to see at a bottom. I really like to see those positive divergences. And what happened? We got a nice breakout, but we're hitting the 200. That's been a problem before. PMO is looking pretty good here, but it was looking pretty good up here as well. But here's one. I mean, I think this one could be interesting, maybe a watch list. I'd want to see what it does up here at 24, but it looks like it's poised to do something nice. All right. We'll look at one more. And let's pick something off of the second page. And there's a nice breakout, but that's a pretty long declining trend. So I think I would probably pass there. Double bottom. PMO rising. That one just popped right out at me. Let's take a peek at this a little more closely. Double bottom in the short term, coming in off of this decline. One there, one there. Has not executed yet. It has not passed over that confirmation line. It didn't even get up quite there. But I'd be watching for that. I like this PMO setup, and it's coming in oversold territory. Scooter making a move. Notice that the OBV is starting to show some improvement as well as far as the tops. We know we're going to get some tops that are rising here. So I think LFVN, Life Vantage Corp, looks interesting right now too. So that's pretty much all I had for the scanning. Feel free. My email is erinh@stockcharts.com. If you're having trouble with the scan and you've already tried to look it up and find the solution in our customer support area, if you're still having trouble, or if you like something from my scan and are interested in how to incorporate it, feel free to send me an email. All right, Tom, we're ready to wrap this up. I only looked at those 3 stocks, but I think there's still some more interesting opportunities out there in healthcare and staples.
Yeah, I think there are definitely some opportunities. I think the market, first of all, it's just going to have to find a short-term floor. As you can see on the chart here, we got the Dow Jones Industrial Average currently down 520 points now today. The NASDAQ down 185, S&P 500 down 56. Russell 2000 also down 33. So we're looking at 1 3/4 to 2 1/4% across the board. So not very good action on the market overall. I did want to just show one thing very quickly. If you looked at PBY and noticed that the change on the scooter was up 54, if you pull up the chart, the stock's actually down today. Just keep in mind that it's based on 30% of it is based on the rate of change going back 125 days. This is actually being positively impacted by this huge gap down back in November that makes the ROC jump. And that's why PBYI, I just happened to notice it. I wanted to point it out because it's not always about what you're doing today. It can be, you can see these changes, big changes in scooter based on something that took place months ago.
Right, because it does, it does tend to put more weight on the intermediate and long term. So it does seem surprising at times, but like you said, if you're seeing something in the longer term, it makes sense that it might move like that.
No doubt about it. All right, want to thank everybody for being with us today. Please remember to complete the survey as you exit. It's located below the video player. We do love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody. We will see you back here tomorrow. Take care and be careful out there. Could see some more selling this afternoon. Happy trading, everybody.